Yes, now you can share the screen.
Okay, fine.
Perfect.
First of all, sorry everyone. The mic was working when I joined and suddenly it stopped working. I don't know, there's some technical glitch. Sorry for that. Let's continue with the topic. So I'm starting with section 18(1)(d), starting with the legal provision. The 18(1)(c) basically says that subject to condition and restrictions as may be prescribed, where exempt supply of goods or services, a person which is supplying any goods or services which was earlier exempted, but suddenly by change in any law or because of any notification, certain exempt supply of goods or service, it became taxable. Then in that case, such taxpayer is entitled to input tax credit in respect of what? In respect of input which is lying in stock, and input which is contained in semi-finished goods or finished goods which is held in stock, which is relatable to such exempt supply. So, this also applies to capital goods. Capital goods which are exclusively used for supply of such exempted goods. And of course, because if a capital good is not exclusively used for manufacturing of exempted goods, then you might have already taken the credit of same. Either you might have taken complete credit, or you might have taken credit and you must be reversing ITC under rule 42 and 43 section 17 on the exempted turnover. So in this case 18(1)(d) it applies where a taxable goods exempted goods or services becomes taxable. The moment it becomes taxable, on that day, if you have any stock of input or semi-finished goods or finished goods, then inputs used in manufacturing that portion can be availed and capital goods can be availed. However, in case of service, certainly you might not have inputs, because in most of services you don't need any input, like in our case consulting services. But yes, if you are in engineering service, or your client is in installation on erection or installation service, then there might be some goods which are inputs or capital goods on which ITC can be availed. Now, the question arises that if suppose when the goods or service became taxable, then how much credit we can take? And most importantly, what if the credit has become time barred because of operation of section 16(4)? So let me come to that also. There is a specific provision, subsection 2 of section 18, which clearly says that a registered person shall not be entitled to take input tax credit under subsection 1 in respect of any supply of goods or service or both to him after expiry of 1 year from the date of issue of tax invoice relating to such supply. So it means, suppose today is 21st of September. Let's take an example. Next GST Council meeting is held on 31st of October. And on 2nd of November, they decide certain goods to be made taxable. Now, let's take a real example. If you remember in 2022, I remember in July 2022, cereals, branded cereals are exempted from, grains and cereals are exempted from tax. But in 2002 July, I remember it was, if it was sold as pre-packaged and in a brand name, with a brand name, then it was made taxable. And it happened, let's say for example, it might have happened on 15th of July. So on 15th of July, if it has become taxable, the one day prior to that, 14th of July, on that day, whatever stock you have of such commodity which was lying as such or used or maybe lying in semi-finished goods or finished goods, then any GST paid on that, input tax rate on can be taken off that. However, in my example, if even if you might have some stock of cereals, the same was tax free. So let's take another example. Let's say, as I was mentioning, 2nd of November, some commodity is made taxable. Now, if it is made taxable, then 1st of November, whatever item, like let's take example of solar panels. Solar panels, let's take example. Let's assume that solar panels are trading at nil rate as of day. However, it was earlier 5%, now 12%. Just for example, we are assuming that it is trading at nil rate as of today. And it is made taxable on 2nd of November 2024. Then as on 1st November 2024, whatever stock of solar panel you are having, or you have used solar panels in manufacturing of finished goods or work in progress, you can take ITC of same. The amount of credits under subsection 1 and the amount payable under subsection 4 shall be calculated in such manner as been prescribed. So basically, this subsection 5 says कि ये जो one way आपको whatever amount you have to avail, or in case there is any supply of such goods, then what is the amount of tax which you can avail? It will be calculated as prescribed. So let's take a reference to such rules. Rule 40, it is the rule 4 wherein the mechanism is prescribed. So manner of claiming credit in special circumstances. So it says, sub rule 1 says, the input tax credit claimed in accordance with the provision of subsection 1 of section 18 on inputs held in stock or inputs contained in semi-finished goods or finished goods held in stock, or the credit claimed on capital goods in accordance with provision of clause C or clause D of the subsection shall be subject to following condition. Now, clause C and clause D are identical. We are discussing clause D, which is related to exempted goods becoming taxable, and clause C is related to composition dealer coming into taxable regular scheme. So, clause A of sub rule 1 says the input tax credit on capital goods in terms of clause C and clause D of the subsection 1 of 18 shall be claimed after reducing tax paid on such capital goods by 5 percentage point per quarter of a year or part thereof from the date of invoice or such other document on which capital goods was received by the taxable person. So in simple terms, when it comes to goods, inputs and capital goods, the mechanism of calculation of ITC availability is different. Why it is different? So in case of capital goods, suppose it was input and you might have purchased 10,000 units. So out of 10,000 units, it was quite possible that you have stock of 3,000 unit also only, or 4,000 unit only. Then in that case, proportionate ITC will be limited to stock available. However, in case of capital goods, there is no, you are not going to consume capital goods. Whatever capital goods you had purchased will be available. So you're entitled for entire credit. However, there is a formula which says that per quarter, you can say it as a depreciation. So depreciation will be considered 5% per quarter or part of the quarter. So whatever period has already been used, that capital good you have already used in manufacturing of exclusively exempted goods or providing for exempted services, that ITC pertaining to that portion has to be removed. Now, sub rule 1 clause B, it says that registered person shall within a period of 30 days from the date of becoming eligible to avail input tax credit under sub rule subsection 1 of section 18, or within such further period as may be extended by commission by notification in this behalf, shall make a declaration electronically on the common portal in form GST ITC 1 to the effect that he is eligible to avail input tax credit as aforesaid. So as of now, the commissioner has, there has not been any extension. So you have to, whenever it happens, you have to make out entire information you have to prepare and file ITC 01 within 30 days. Provided that any extension of time limit notified by the Commissioner of State Tax or Commissioner of Union Territory shall be deemed to be notified by the Commissioner. So of course, because it is GST is a law wherein one portion, it is governed by, administered by center as well as relevant state. So what it means to say that even if the Commissioner of State or Union Territory has notified any extension of time limit, that shall be considered as if it has been notified by the Commissioner of any of the center or state. Now, going ahead, sub rule 1 clause C, it says that declaration to be filed under clause B, which means ITC 01, shall clearly specify the details relating to the inputs held in stock or inputs contained in semi-finished goods or finished goods held in stock, or as the case may be, capital goods, on the day immediately preceding the date from which the supplies made by the registered person becomes taxable. As I mentioned you, I gave you two examples. One example I gave you of manufacturing of solar panel, which becomes taxable on 2nd of November. So in that case, you will have to look for the stock of 1st November. In case of claim under clause D of section 1 of section 18. Going ahead, rule 40, sub-rule 1, clause D, it says the details furnished in the declaration under clause B shall be duly certified by a practicing chartered accountant or a cost accountant if the aggregate value of the claim on account of central tax, union tax, state tax, union territory tax and integrated tax exceeds 2 laख rupees. So अगर आपका जो क्रेडिट है, इस तरह से आप जो क्रेडिट क्लेम कर रहे हैं, वो क्रेडिट अगर 2 लाख रुपए से ओवरऑल सीजीएसटी, आईजीएसटी, एसजीएसटी और यूटीजीएसटी सबको जोड़ करके वो टोटल 2 लाख से एक्सीड करता है, देन इन दैट केस देयर इज एन एडिशनल रिक्वायरमेंट ऑफ गेटिंग अ सर्टिफिकेट फ्रॉम चार्टर्ड अकाउंटेंट. और ये सब कुछ आपको 30 दिन के अंदर करना है, बिकॉज विद इन 30 डेज आपको आईटीसी 01 फाइल करना होता है. So there is one sub-rule E also. It says the ITC claim in accordance with provision of clause C and clause D of subsection 1 of section 18 shall be verified with corresponding details furnished by corresponding supplier from form 1 or as the case may be form 4 on the common portal. So अब एक और बात आपको इंश्योर करनी पड़ेगी, हम क्रेडिट ले तो रहे हैं लेकिन एट द सेम टाइम वो क्रेडिट मेरे जीएसटीआर 1 में रिफ्लेक्ट करनी चाहिए. So most of the exempted people having dealing in exempted goods, वो तो reconcile भी नहीं करते होंगे, but this is one requirement. So in anticipation that in future government may make it taxable and will have to avail ITC, we shall reconcile the ITC available in GSTR 1 also. Now since we are discussing clause D, there's one small portion of clause D related to composition tax dealer becoming taxable. वो भी हम देख ही लेते हैं. So GSTR 4, what is GSTR 4? GSTR 4 is a basically annual return to be filed by composition dealers, wherein a composition dealer itself provides detail of its outward supplies and inward supplies. Annual return, it is to be filed by 30th of April. ठीक है? It also captures details of inward supplies GSTN wise. So in annual return, you are providing your outward supplies, and inward supplies you have to provide GSTN wise. So table 4A says inward supplies by registered dealer which are not covered by under RCM, which are very important. अगर ये आपने रिफ्लेक्ट किया होगा तभी आप उसकी क्रेडिट ले पाएंगे. Table 4B, inward supplies by registered dealer under RCM, inward supplies from registered person and import of services. Important is that GSTR 4 cannot be revised once filed. Why this is important in here is, suppose 30th of April को आपने GSTR 4 फाइल कर भी दिया. अब उस वक्त आपके दिमाग में होगा कि आउटवर्ड सप्लाईज करेक्ट दिखा देते हैं, आरसीएम दिखा देते हैं, इंपोर्ट ऑफ सर्विस दिखा देते हैं ताकि हमारी कंप्लायंस पूरी हो जाए. बाकी ये इनवर्ड सप्लाई बाय रजिस्टर्ड डीलर वेयर नो आरसीएम इज एप्लीकेबल, उसमें इतना मेहनत क्यों करने का, इसमें मुझे क्या मिलना जाना है, और आपने नहीं दिखाया एंड लेटर ऑन आपकी कमोडिटी टैक्सेबल हो जाती है. तो उस वक्त क्योंकि आपने टेबल 4A में प्रॉपर डिस्क्लोजर नहीं दिया है, उस पोर्शन ऑफ आईटीसी का आपको क्रेडिट नहीं मिल पाएगा और आप जीएसटीआर 4 रिवाइज नहीं कर पाएंगे. नाउ देयर इज वन क्लॉज 6 which sub rule 6 which says subsection 6 of section 18 which says in case of supply of capital goods or plant or machinery on which input tax rate has been taken. So basically ये बोलता है कि भाई अभी तक तो आपने जो सबसेक्शन 1 से सबसेक्शन 5 में आपने क्रेडिट ली है, आपकी कमोडिटी जो है या आपकी सर्विस जो है वो पहले एग्जम्प्टेड थी, उसके बाद टैक्सेबल हो गई, बिकॉज ऑफ दैट आपने कुछ क्रेडिट ली है. बट सपोज अगर उसको आप बैक टू बैक वापस सप्लाई करते हो तो क्या, तो इन दैट केस जैसे आपने क्रेडिट लेते टाइम पे 5% पर क्वार्टर कैलकुलेशन किया था, 5% पर क्वार्टर कैलकुलेशन किया था और पार्ट ऑफ द क्वार्टर कैलकुलेशन किया था, लाइकवाइज जितने पीरियड ऑफ यूज के लिए आप जितने पीरियड की आपने क्रेडिट ली है उस पीरियड का 5% पर क्वार्टर या पार्ट ऑफ द क्वार्टर आपको कैलकुलेट करके रिड्यूस कर देना है इनपुट टैक्स क्रेडिट आपने जो अवेल की उसमें से, प्लस जो ट्रांजेक्शन वैल्यू है जितने पे आप एक्चुअल में सप्लाई कर रहे हो उस पे जो टैक्स बनता है उसमें से विच एवर जो हायर है वो अमाउंट आपको पे करनी है। इसमें एक छोटा सा प्रोविजो है which says that where refractory bricks, molds, dies, jigs and fixtures are supplied as scrap, क्योंकि अगर आप इसे एज ए स्क्रैप, देयर आर मोल्ड्स, डाइस, जिग्स, फिक्सचर्स जिनकी लाइफ लिमिटेड होती है, ठीक है, तो अगर आप ये एज अ स्क्रैप प्रोवाइड कर रहे हो तो आप सिर्फ ट्रांजेक्शन वैल्यू पे टैक्स पे कर सकते हो, और उसमें 5% पर क्वार्टर वाला जो कंडीशन है उससे आपको रिलैक्सेशन मिल गया है अगर आप उसे एज अ स्क्रैप सप्लाई कर रहे हो तो। ये जो देयर इज रूल 40 sub rule 2 it says that amount of credit in case of supply of capital goods or plant or machinery for the purpose of subsection 6 of section 18 shall be calculated by reducing the input tax on the said goods at the rate of 5% for every quarter or part of quarter from the date of issue of invoice। यहाँ एक glitch है, it says that part of the quarter or part of the quarter from the date of issue of invoice, but mind you आपने क्रेडिट फ्रॉम द डेट ऑफ इश्यू ऑफ इनवॉइस नहीं ली है, आपने क्रेडिट ली है फ्रॉम द डेट व्हेन योर कमोडिटी बिकम टैक्सेबल। सो आपको ये ध्यान रखना है, ऐसा नहीं कि मैंने क्रेडिट 9 रुपए ली है और उस पीरियड के लिए रिवर्सल 10 रुपए कर रहा हूं। सो वो आपको वर्किंग करनी पड़ेगी। डेफिनेटली आप कंप्यूट कीजिए, आप कंप्यूट उसी दिन से कीजिए जिस दिन इनवॉइस इशू हुई थी, फिट आउट ऑफ दैट 10,000 यू विल हैव टू मेक अ वर्किंग दैट आउट ऑफ 10,000 we had appeal say 8,500 and 1,500 not availed, so you'll have to reverse only 8,500 which is pertaining to the day from when you have taken credit up to the date of supply of such capital goods from your factory. Now question arises, coming back to 18(1)(d), ITC can be availed up to timeline prescribed under 16(4). So what if ITC has expired? So इसका हम एग्जांपल देखेंगे। दो सेक्शन 18 सब सेक्शन 2 में बोला हुआ है कि जिस दिन आपकी कमोडिटी या सर्विस टैक्सेबल होती है उसके ठीक एक दिन पहले आप क्रेडिट, आपके जो स्टॉक में इनपुट्स और कैपिटल गुड्स है उसकी क्रेडिट ले सकते हैं। अगर वो 1 साल पुराना है तो 1 साल तक आप ले सकते हैं, 1 साल से ज्यादा पुराना है तो आप वैसे भी नहीं ले सकते हैं। तो अब इसमें आईटीसी एक्सपायर होने का है, सेक्शन 16(4) का एप्लीकेबिलिटी का स्कोप है नहीं, वो हम आगे देखते हैं। What if GST invoice details of inward supply was not reported in GSTR 4 of annual return? Yes, अगर ये 18(1)(c) से रिलेटेड है। अगर आपने GSTR 4 में आपके कॉम्पोजिशन डीलर ने डिस्क्लोज नहीं किया है तो GSTR 4 को तो रिवाइज नहीं कर सकते हैं। सो इन दैट केस आपको वो क्रेडिट लेने में डिफिकल्टी होगी अगर उस वक्त गवर्नमेंट रिवाइज करने की स्पेशल फैसिलिटी नहीं देती है तो। Can ITC be availed on services availed in connection with capital goods like installation, testing, freight? So like I have purchased a capital goods, I have let's say warehouse, I have a cold storage. Let's take one example, a cold storage wherein I had purchased machinery worth 5 crores on which I had paid GST 18%. नाउ कोल्ड स्टोरेज में आप क्या स्टोर करोगे? आप फ्रूट्स एंड वेजिटेबल स्टोर करोगे विच इज एग्जम्प्टेड फ्रॉम सर्विस जीएसटी। सो सिंस इट इज एग्जम्प्टेड फ्रॉम जीएसटी तो आप 5 करोड़ पे जो जीएसटी पे किया उसकी तो क्रेडिट लोगे नहीं। अब उस 5 करोड़ के अलावा इंस्टॉलेशन, टेस्टिंग, फ्रेट वगैरह का भी आपने पेमेंट किया होगा जो आप उस कैपिटल गुड्स के साथ ही कैपिटलाइज करोगे। लेट्स से वो दैट इज वन अदर 1 करोड़। अब वो 1 करोड़ रुपया पे जो आपने जीएसटी पे किया 18 लाख, वो आपने कैपिटलाइज किया और आपने बुक्स में उस कैपिटल गुड्स को कॉस्ट ऑफ कैपिटल गुड्स 5 करोड़, इंस्टॉलेशन, टेस्टिंग, फ्रेट एटसेट्रा 1 करोड़, 6 करोड़ पे कैपिटलाइज किया है। रादर 6 करोड़ सॉरी 6 करोड़ एंड 18% जीएसटी 7 करोड़ 8 लाख पे कैपिटलाइज किया है। ठीक है, नाउ व्हाट हैपेंस, ये एक केस स्टडी ले लेते हैं। ये मैंने प्रेजेंटेशन में नहीं है, जस्ट मेरे दिमाग में अभी आया due to one relevant case I am actually handling with DGGI. When you had set up the factory, let's say, then you are having a mindset of using this warehouse for local domestic turnover. Now, let's say today is 21st of September and you had set up this entire factory last year. It is within 1 year. क्योंकि अगर 1 year के अंदर नहीं है तब तो आपका वो सेक्शन 18(2) इम्प्लीकेशन आ जाएगा और ये सारी डिस्कशन ही चली जाएगी. सो लेट्स से विद इन 1 year है. आज आपने डिसीजन लिया कि नहीं, मैं डोमेस्टिक मार्केट में काम करके मुझे फायदा नहीं होगा, मैं एक्सपोर्ट मार्केट में काम करूंगा या एक्सपोर्ट मार्केट में भी काम करूंगा. द मोमेंट यू टेक दिस डिसीजन, देन माइंड यू, not by virtue of operation of law, but because of virtue of this decision also, your commodity becomes taxable. Or rather, I'll say it doesn't become taxable, but when a exempted commodity is exported, then you are entitled to avail credit of same. So a question may arise that whether 18(1)(d) can be invoked here. In my view, yes, we can do so. We can do so for two reasons. We can avail credit by invoking by opting under section 18(1)(d), and if section 16(4) it has not become time barred, ITC has not become time barred under 16(4), we can directly avail under 16(4) also. 18(1)(d) ka, it may not be necessary to come to 18(1)(d). However, if you are coming under 18(1)(d), अगर आप 18(1)(d) ऑप्ट कर रहे हैं तो ये जो सर्विस एलिमेंट है 1 लाख, भले आपने कैपिटल गुड्स में उसको कैपिटलाइज किया है, for purpose of GST it remains services. Capital goods का definition है inputs which is not capitalized. So capital goods के definition में कहीं भी ऐसा नहीं बोलता है कि services which is not capitalized. So भले आपने accounts में service, installation, testing and freight services को capitalize कर लिया हो, it is not capital goods for the purpose of GST. And if you are taking credit of 18(1)(d), then service की credit आप नहीं ले पाएंगे. Yes, there is a catch. अगर आपका सर्विस का इनवॉइस टाइम बार्ड नहीं हुआ है तो आप ले सकते हैं या नहीं ले सकते हैं. द एग्जाम्पल, द केस स्टडी विच आई शेयर्ड जस्ट नाउ, इसमें आप ले सकते हैं. शायद इसलिए ले सकते हैं क्योंकि कैपिटल गुड्स में क्रेडिट का इंटाइटलमेंट जो होता है अगले 5 सालों के हिसाब से होता है, बट इनपुट्स का नहीं ले सकते हैं. और सपोज अगर आपकी जो कमोडिटी है वो बाय वर्च्यू ऑफ अमेंडमेंट टैक्सेबल हुई है, तो आप कैपिटल गुड्स 1 साल से ज्यादा पुराना अगर है तो सेक्शन 16(4) के ऑपरेशन से ले सकते हैं. दैट इज माय इंटरप्रिटेशन. अगेन द रीजन इज दैट जो कैपिटल गुड्स का जो क्रेडिट होता है वो 60 मंथ्स में स्प्रेडेड होता है. अगर 16(4) में टाइम बार्ड नहीं हुआ है तो वहां भी आप ले सकते हैं. Next question arises, how much ITC can be availed on capital goods purchased within 1 year? So let us, in questions का आंसर देने के लिए, let us take up some case studies. First is ABC Limited is in the business of trading of cereals, which are exempted from GST. Now ABC Limited purchased bulk quantity from market, and after certain quality check, it sells the same under the brand name of Vital. Vital इनका brand name है. अब ये तो सब कुछ exempted था. Let us assume ABC Limited had expanded and doubled its capacity in February 23. फरवरी 23 में इनका धंधा बहुत अच्छा चल रहा था, इन्होंने एक्सपेंशन कर लिया. Now effective from 1st September 2023, सीतारमन मैडम को पता चल गया कि ABC लिमिटेड ने एक्सपेंशन किया है और टैक्स बेनिफिट उनको मिल रहा है, उनको अच्छा नहीं लगा. उन्होंने ब्रांडेड सेरेल्स को सी कवर्ड अंडर द टैक्सेबल स्कीम. It were made liable to 5% GST. Now, can ABC Limited avail ITC of GST paid on machinery in February 2023? Of course, ABC Limited के पास ऐसा कोई स्टॉक नहीं होगा जिसकी वो क्रेडिट ले पाए, क्योंकि वो परचेज सेरेल कर रहे हैं. अगर वो एग्जम्प्टेड था तो वो बिना टैक्स पेमेंट ही परचेज किया होगा, तो सेरेल्स पे तो क्रेडिट नहीं मिलेगा. हाँ, अब आपके पास कोई पैकिंग मटेरियल वगैरह है, ठीक है, उस पर आपको क्रेडिट मिल सकता है. बट here our query is that can ABC Limited avail ITC of GST paid on purchase of machinery in February 23? Let us see. See, if the ITC was if the GST was paid in February 23, it means it was paid in financial year 2023. So before operation of 18(1)(d), you will also have to check that whether ITC is टाइम बार्ड अंडर सेक्शन 16(4), क्योंकि अगर 16(4) में टाइम बार्ड हो गया है तब तो आप कुछ कर ही नहीं सकते. सो नाउ सिंस एक्सपेंशन वाज मेड इन February 23 एंड इट इज कवर्ड बाय 2022-23. So the last date for availment of credit for 22-23 would be 30th of November 2023. And now that the change has been made in September 2023, so which is before the last date for availing the ITC of 22-23, fortunately, ABC Limited can avail ITC on such machinery. And ABC Limited can also avail ITC of packing materials or other material on which it had paid tax and lying in stock as on that date. Again, as I just now in previous slide mentioned, कि अगर आपका जिस दिन टैक्सेबल हो रहा है कमोडिटी, उस दिन जो स्टॉक में गुड्स हैं, इनपुट्स हैं, अगर वो 16/4 में टाइम बार्ड हो गया, ओके, लेट्स टेक अनदर एग्जांपल, whether your response be different if the above change in tax rate would be effective from 1st January 2024. So अब ये क्वेश्चन में ये आ गया कि जो मैडम सीतारमन ने सितंबर 23 में चेंज किया था, वो चेंज सितंबर 23 में नहीं होके जनवरी 24 में हो रहा है, तो क्या आपका रिस्पॉन्स में कोई डिफरेंस होगा? यस, देयर इज अ इंपॉर्टेंट चेंज. अगर आप 1 जनवरी 2024 को ये चेंज आ रहा है, तो आपका एक साल का जो पीरियड है, जिस पीरियड का आप क्रेडिट ले सकते हैं, वो पीरियड बनता है 1 जनवरी 2023 टू 31 दिसंबर 2023. तो अब 1 जनवरी 2023 से 31 मार्च 2023, ये तो आपका टाइम बार्ड हो गया 30 नवंबर के बाद.
Vikas ji, sorry to interrupt. We will stick to English most of the time, please.
Sure, okay. So आपका ये जो whatever this credit for the period of 1st January 2024 to 31st March 2024, it has already time barred because the last date for availing the ITC was 30th of November. So now you cannot avail credit of same. So now your 12-month period as per section 18(2) reduces to 9 months only. It becomes 1st April 2024 to 31st December 1st April 2023 to 31st December 2023 only. Now, whatever stock of packing material or other taxable item you have in stock as such or as part of finished goods or work in progress, you can certainly avail ITC of same. However, with respect to capital goods, you can avail ITC if it was set up it was purchased during this 9 months, but if it was purchased during the period of 1st of January 2023 to 31st of March 2023, which is the case here, in that case, prima facie it appears that you cannot avail credit, but it is not correct. You can avail credit, in my view. However, it would be restricted to the period which is not time barred. However, this is a disputed view because the law says that first you will have to avail credit and then you will have to reverse. And here I am telling that though you might not have availed during those 3 months, but then you can forego the period from February 2023, the date of purchase, up to 31st March 2023, and then you can avail for the subsequent period. However, this is a slightly litigative view. However, there is one more important fact here, which rules out all this possibility, and that is very interesting. After the month of August 2022, when the department had introduced the method of availing ITC on the basis of 2A and making temporary and permanent reversals, after that, whatever we are discussing here, it has become just a theoretical situation, because now if you are following that practice and if you are availing credit as per 2B and making temporary reversals, then practically there is no credit which you have not availed. You had already availed the credit and made reversal of same, and if you have to again avail that credit under section 18(1)(d), then it is one may say that it is a recredit, and for recredit there is no time limit. I hope I am clear. Moving ahead to another point, if anyone has any doubt on this or query on this. So, okay, coming to another case study.
Vikalji, there are certain queries in the chat box also. So would you take this after the case studies or before the case studies?
So if we take this much queries now, then we'll not be able to complete the session within 1 hour. What I'll do after the session, I'll compile and send to Arudha or in the group so that everyone can look at it, right? Make sense?
Vikalji, we can take 18.4 in the next session also.
Okay,
So
fine.
can conclude 18.1D, 18.6 which we have touched.
Okay, fine.
So if the case studies for 18.1D and 18.6 are one more case study, or you might be knowing, we can the case study.
Let me have a look at the chat box. Let me have a look at the chat box. The first query is, sorry, some South Indian don't understand English. Very sorry for that. On a lighter note, sorry for that. Let us move ahead.
I will speak up the query. I will speak up the query.
Okay.
So the first query is from Venugopalji, wherein he has discussed, say, in section 18.1D, you have discussed that once the exempted supply becomes taxable, then the eligible to be taken by through ITC 01. So what Venugopalji is saying that supposedly the in case of GTA, there was a rate of 5% without ITC. Now it shifts to 12% with ITC.
Right.
Whether falling within 18.1D or not.
So I took a relevant example of that cold storage. There is a similar that this is also identical case wherein actually your commodity or service has not become taxable by virtue of law, but you are exercising a different option now. So option was available earlier also. So in my view, if you are exercising that option, then see 18.1D is not necessary. You can opt. You can go in section 16.4 also. The day when you're in case of GTA, there may be inputs also like tires, majorly tires and other consumables which are used in repairs, and there may be capital goods like trucks also. So in my view, 18.1D can be opted in this case also. However, you may have to, the department may litigate it because it is not, if you go to the text of the 18.1D, let me come to that slide. It clearly says, yes, where an exempted supply or where exempted supply of goods or service or both by a registered person becomes taxable supply, such person shall be entitled to take credit of input tax in respect of input held in stock or inputs contained in semi-finished goods held in stock. So this clause D, it doesn't speak that it become a taxable supply by virtue of any amendment in law. So of course, your supply was earlier also taxable, but when you were operating under 5% scheme, it was not taxable. Now when you are coming into 12% scheme, it become taxable. So one may take a plea that 18.1D is applicable in this case, and yes, we can go under 18.1D.
If you allow screen, which I would like to share the relevant part of notification 11/2017 for the views of group members. See, this is the relevant aspect of notification number 11/2017, where it says wherever rate has been prescribed in this notification, subject to the condition that credit of ITC on goods or services used in supplying the service has not been taken. Mean the credit of ITC on services used for exclusive in supplying such services has not been taken, and credit ITC charged on use partly for supplying such service and partly for effecting other supply for inputs is reversed as if supplies such service in exempt supply and extracts provision of 17.2 of rules made thereunder. So what notification 11/2017 is saying that whenever a 5% rate is being specified, it is only an exempt supply by virtue of this provision of 11/2017 and for a limited purpose of 17.2. It is not an exempt supply generally by virtue of section 11 of the CGST Act. So there is an alternative view coming at many places wherein it says that when 5% rate without ITC is being provided, it is not an exempt supply per se by virtue of section 11. It is only an exempt supply for 17(2) by virtue of this condition 11/2017, and rest it is a taxable supply. So whenever a dealer shifts from 5% to 12%, it is still a shifting from taxable supply to a taxable supply, not for the purpose of section 18(1)(d). So this is another view which is coming from different parts. So would like to have the view of the speaker also and all the other colleagues on this part.
See, there is one thing when you as you rightly referred this notification. If you are if one GTA has already opted for 5% scheme, you must be aware that that GTA is not having an option of making taxable supply at 12% rate with ITC benefit, right? So there are GTA which have taken separate GST registration for making taxable supplies under 12% rate. However, for making supplies as a with 5% option, whether in reverse charge or rather it is not exempted or taxable. If they have opted for reverse charge, then they have to take separate GST registration. So now see, you might have we all are here part of this GST faculty group, and we all know the hierarchy that the act must prevail over rules and then notification and circular and all that. I won't repeat that thing. But a notification cannot stop you from taking a substantial benefit available under the law. Now, when you have opted for this 5% thing, then of course the service per se is not exempted. It is neither exempted nor nil rated. It is certainly a taxable thing. But there is a concept of harmonious interpretation. The section 18(1)(d), what is the purpose behind 18(1)(d)? One have to consider what is the intention behind 18(1)(d). The intention behind 18(1)(d) is to facilitate those taxpayers who were not paying taxes, who were losing ITC benefit because they did not have the output tax liability. Now, if we go by word to word of a notification which restricts you, wherein such a strict interpretation is taken, if you had opted for a exemption notification, then you are not, you will not be getting benefit of ITC in future. When you shift from exemption to taxable scheme, then I think it is slightly different. We will have to interpret this provision from the perspective of intention behind the intention of the lawmakers behind making this provision. And you had taken an example of GTA, and I had taken an identical example of cold storage. And my case is actually going. I am actually representing my client in with DGGI as of now, and even a level of agency of DGGI has accepted my view. Though the case is not clear as of now, the matter is not clear as of now, it is yet under discussion. But yes, they have agreed that they have not penned it down yet. But yes, they had agreed that yes, this view is possible.
Any other view from the group members? Like Venugopalji has said that 11/2017 has also been issued in section 11. So if this condition is there, it is coming under section 11 only. So any other view from the group members?
Arpit bhai, please share your view also.
Yes, let's take next query, and then when I will conclude, I will share my view. So next, Vikashji, come your discussion only, wherein you have referred section 16 subsection 4, the time limit to claim ITC under section 16 subsection 4 and section 18(1)(d). So your view is that section 18(1)(d) is subject to section 16 subsection 4. And if section 16 subsection 4 time limit has gone, then 18(1)(d) would be restricted only for the period which is subsequent to 16(4) restriction.
Yes, so yes, it looks like that. However, as I mentioned, that if you are following this mechanism of taking ITC, see, when you refer this section subject to such condition restriction as may be prescribed. So this 18(1)(d) is subjected to condition or restriction which is prescribed, but is nowhere overrides section 16(4). So that is why it is subject to other provision of the Act.
No, sir, but when I'm Raghunathan here, when there is one provision which is a self-code it's a code by itself overall, and the prescription is there, my opinion is that the other 16(4) will not override 18(d) because it's a self-contained code. If I remember, there's some judgment somewhere, I'm not able to recall. I do not know whether it was income tax or here, where a section itself is complete in itself, prescribes here, as in this case, the time limit and the forms to be filed and all that. So 16(4) will not have any implication. This is my humble submission.
Yes, Vikalji, you can complete your view.
Okay.
No, I have completed, sir. Yes, sir.
No, yes, sir. Vikalji, your view? You have completed. You are continuing. You are saying.
So need to have a look at that case what he just mentioned, because this all these cases vary from case to case basis. But prima facie, this would be subject to 16(4) in my view.
Yes. Any other views from the members? Or Raghunathan ji would like to add something?
Arpit, by
Yes,
9:48, just a time reminder.
Sorry, correct.
Credit of 16, the time limit which is prescribed in 16(4), it would apply only for that credit which is going into the electronic credit ledger through the return which is being filed. Now, in this case, this credit would travel to the electronic credit ledger not through the return, but it travels through ITC 01 form into the credit ledger. So maybe I am of the view that the time limits of 16(4) would apply only for a credit taken under section 16 and not for a credit taken under section 18.
This sounds logical, as you Praveen ji, this sounds logical, and this view can be taken. I agree.
Now, coming to one more important aspect which Vikas ji had deliberated on, the services part. Vikas ji, if you can share your PPT for 18(1)(d).
Yes, 18(1)(d) here. PPT is not appearing on the screen?
No, I had shared my screen, so it is not appearing.
Okay. Let me share again.
Yes.
Which slide? 18(1)(d).
So one important thing which you had highlighted regarding the services part, that whether services would be eligible or not. So if we go to 18(1)(d), it says input tax credited in respect of inputs held. So it is using in respect of word for inputs held in stock, inputs contained in stock, finished stock held in stock relatable to such exempt supply. And for capital goods, it is using the word on capital goods. It is not using the word in respect of. So somewhere down the line, when the term in respect of has been used, it covers the services which were used for making the stock or the goods, semi-finished goods or finished goods held in stock. But when the word on has been used, now it has to be seen that whether on would be specifically relating to goods or whether it would be including the services which were required for the installation part or not. Because distinct, there is a distinct word. They could have used in respect of capital goods also.
No, so okay. So sorry to interrupt. It is the other way. they have used the word on capital goods, and capital goods has been specifically defined in the law. Now, had they been used the words in respect of capital goods, then we could have taken the credit, consider the credit of service element. But yes, as you mentioned, we all are advisors, and if there is any benefit to the client, we can certainly take such a stand, and it may taste the litigation. But then talking between the lines, the word on very clearly implies that you can take credit particularly on credit goods, which is capital goods, which has been specifically defined in the law.
Yes, that's what I was saying, that since the word on has been used, so therefore there is a distinct different use of language by the legislature.
Yes.
Now, it was a question to be thrown to all the participants in the group. So any other views, or there is no view, one is coming from the speaker only, and any other views by the members on this use of language?
Arpit ji, I understand in respect of has also been interpreted as on. However, considering this placement of this entire provision, because we are talking about inputs which are lying in stock, there is a possibility that certain inputs may not satisfy the conditions, like they may be 1 year old, older than 1 year. So I think that is why they have used this terminology in respect of inputs in stock. Whereas, as you rightly mentioned, for capital goods, it is specific to that particular capital goods, that for each capital goods, you have to make a separate calculation because the period of holding may be different. That is why I think the word is on capital goods. This is my understanding of the difference.
No, the question is, Vishalji, that whether credit in respect of installation services would be covered when they have used the term on capital goods.
Acha, sorry. I believe yes, because when we are capitalizing the installation along with the capital goods, I believe that it becomes a part of the value of the capital goods. And I at least I understand it should partake the character of goods itself. This is my interpretation of that particular provision. Though obviously it is a bit litigated.
So section 2 clause 19 defines capital goods means goods the value of which is capitalized in the books of accounts of the person claiming the.
Right, sir. Hello.
Forward your contention, I can always say that I have capitalized the goods, but the value is something which I have done in my books of accounts, which may or may not include the value of services. This is one extended version of your argument which we can take, because when the client will come to you, we sometimes have to take an aggressive opinion. So this is one part of the aggressive opinion which can be taken. Yes, it is capital goods. I have capitalized the goods in my books, but the value is something which will be derived for those goods as per the accounting standards.
Sir, I'll link it with another case scenario. Let us say it would have been part of composite supply, the installation. Then how it would have been different? Because when it becomes a composite supply, and let us say the supplier is invoicing you for both items. Now section 8 says you will take the nature of the principal supply, and principal supply is the capital goods. Now in that particular case, my invoice is showing two different line items, though with a single rate as per section 8. Now whether the answer will change in the case of a composite supply in the same scenario?
In case of composite supply, it is part and parcel of the capital goods. See, you are making right questions. You are logically absolutely right. But fortunately or unfortunately, we chartered accountants are very good at analytics and logic. But the law doesn't go by logic, unfortunately. See, Vishal bhai, the point is that the law is very clear. If you see the definition of capital goods, it clearly says goods the value of which is capitalized in the books of accounts. So now if the installation service has been provided separately, it remains a service. Even I'll give you another example. Suppose the capital goods you have purchased. Okay, the same capital goods, 5 crores you purchased, 1 crores you paid on installation and all, right? After use of 1.5 years, you are upgrading or the business did not go well or whatever the reason, you're removing that machine. So on sale of that machine, this entire 5% mechanism, 5% per quarter will apply on 5 crores, but it will not apply on 1 crore. On that 1 crore, you don't have to return any ITC to the government.
Agreed, sir. So my counter question is, I agree to this point. I'm just putting another viewpoint, which at least I believe more than 50% I'm on that side. So my question is that when in a composite supply, the supplier is supplying two different items, and I'm sure in the invoice he will be mentioning.
So
Hello,
just summarize your submission.
sorry, sir.
So the time is 9:56. You can just summarize your thing in 1 minute. So we can
Yeah,
conclude.
so that is what I'm summarizing. So the basic essence is, in case of composite supply, I believe the nature of item that I'm receiving remains two. Only the levy is treated as one. So I believe even in case of composite supply, the receipt of installation service remains a service in my hands. However, as per Section 8, only the levy has been treated as principal supply. So if we are taking a position in case of composite supply that it will be treated as value of goods only, then I believe even for independent supplies, it should be same. This is my analogy. Thank you.
Okay. Thank you. Thank you, Vishal bhai. And these are the discussions which makes the SMS intriguing. And as we say that we are all students of GST, so these discussions enrich, and you never know when you have to take which stand. So, someday you might be taking one stand, and on the next day you might be taking another stand. So,
Yes,
and there was one famous instance wherein one of the High Court advocates who later on gone on to become judge of Supreme Court, argued one case in High Court in favor of the assessee and argued the same case for government when against the assessee in Supreme Court. So this is how the law goes on, and we continue to evolve on the issue. And regarding the two issues which we have discussed, 16.4 and the applicability of section 16.4, my view is that since there is a specific section of 18.2 and credit is availed through 3B, so ITC 01 we are using for this section 18.1D, in my opinion, 16.4 should not be applicable, although the counter views are also there. And regarding the notification 17.2, the rate without ITC being prescribed and the condition only limiting it for 17.2, as Vinuji has said that notification has been issued under section 11.1, so we can take the benefit of that use of that section while issuing the notification, although there are cases being made by department on this issue that they are saying that 18.1D is not applicable wherein rate has been prescribed, but it is without ITC. So this is all about today's session. Vikasji, we would be taking you in the next session also for section 18 subsection 4 and handing over the vote of the session to Venugopalji.
I'll just take 2-3 minutes.
Yes.
I'll just take 2-3 minutes. So I'll just skip this case study. I need to quickly share one case study. See, what you need to do when there is an instance. I had taken an example of BOCL, Bharat Oil Corporation Limited, assuming that petroleum has came into GST. So what are the list of items that you'll need to do? I'll quickly run through it. Prepare list of inventory available in inputs. Prepare a list of inventory used in manufacture of available work in progress and finished goods. If the amount is significant, the department may ask for computation sheet for BOM, but BOM is confidential. So what to do for that? So that is that I'll not touch as of now. Trace the invoice related to such identified inventory. अगर आपने identify किया तो invoice की need पड़ेगी. Then to ensure supplier had correctly filed GST return and such invoices are appearing in GST portal, follow up the supplier for corrective action if invoice is not appearing on the GST portal. Then prepare invoice-wise list of same with below information: total quantity purchase, quantity available as such, or part of WIP finished guides. So I have made a table. This table I can share in the group. So basically, this kind of table you need to prepare with respect to the item identified as stock available. Okay. Another is in case of inputs. Whereas in case of capital goods, you'll have to make this kind of table. Like if it is within 1 year, or table total value of GST amount, number of quarters, ITC to be foregone, ITC to be availed, and like this. And then BOC, all these workings, when it is prepared, GST ITC 1 is to be prepared and filed, and it is mandatory to be filed within 30 days. If the total claims exceed 2 lakhs, then a certificate from chartered accountant or cost accountant is to be obtained and done.
Thank you, Vikasji. Handing over the session to Vinuji for vote of thanks.
Thank you very much. Definitely, as Arpit Bhai said, that every time when we read, it's a new thing, and especially SMS makes us to think on multiple aspects, which we wouldn't have thought, or maybe we would have read and forgot. And members, again, same request, make sure every Saturday you keep some alarm, whatever that works for you. And the session joining link is there in the group description, just in case if you forget that where is the link, we try to keep the link. And let's have always healthy discussion so that you participate in the group and put your views. Thank you so much, Arpit Bhai, for moderating the session. And Vikas Bhai, we will again meet in the next session.
Thank you. Thank you, everyone.
And Vinuji, for me, the best part of this SMS is when contrary views come and we get enriched with the contrary views, because this is one.
Very true.
This is one group wherein the meeting of the minds actually takes place. So
True.
thank you for these issues, and from those issues we can discuss on those parts. Thank you very much all. Thank you.
Yes. Thank you. Yeah. You can end the session, Arpit Bhai.